PayPal stock is down 64% in the past 5 years and 77% from its all-time high. In this video, I'm going to do an in-depth analysis of the company by looking at the financials, the balance sheet, some important statistics, and finally by using my DCF model to calculate the intrinsic value of the company and potential future returns. Starting with the financials, PayPal's revenue has increased consistently over the past decade, moving from $9 billion to $32 billion. Even though the revenue growth percentage has slowed down in the last year, the company is still expanding, and analysts expect this trend to continue. In fact, forecasts show PayPal growing from $33 billion this year to $42 billion in 2029. Profitability has followed a similar path. Net income has grown quite steadily, from around $1.2 billion to $4.6 billion today. What I particularly like about PayPal is that its free cash flow is even stronger, rising from $1.8 billion to about $5.2 billion now. Analysts also expect profit to continue increasing, with earnings per share projected to move from $5.36 this year to about $8.18 in 2029. I agree with this positive outlook because PayPal still has multiple growth drivers ahead. One of the most important is Pay with Venmo, which has seen about 45% growth. Another is the Buy Now, Pay Later business, where they're expecting growth of around 20%. On top of that, the company has entered into a multi-year partnership with Google to integrate PayPal Takeout, Hyperwallet, and payouts across Google products. They will also be using Google's AI to enhance their services and strengthen security. This partnership could lead to significantly higher transaction volumes thanks to Google's massive user base, although it may also put some pressure on PayPal's margins depending on how pricing and take rates are negotiated. Looking at user metrics, active accounts have continued to increase, although the growth has slowed down to just about 2% recently. Payment transactions have actually decreased a little, which isn't ideal, but the total payment volume is still trending upwards nicely. PayPal also has great margins, with profit margin at 14% and free cash flow margin at 16%. And one last thing that I think is extremely important to mention about PayPal's financials is the share buyback program. The company has been buying back shares aggressively, and that's something I really like. By reducing the number of shares outstanding, each investor ends up owning a larger portion of the company and its profits. That means we get to share the returns with fewer people, which can massively accelerate long-term returns for shareholders. So, what does all of this actually translate into in terms of valuation and potential future results? In order to figure that out, I use my own Google Sheet, which is basically a discounted cash flow model that tells me the fair value of a stock based on the assumptions about the future of the company that you plug in. For this analysis, I looked at 7 years ahead and ran 3 different scenarios: a low case, middle case, and a high case. And as you can see, the intrinsic value according to my low case is $73 per share, middle $117, and high $178. And because the stock is currently trading at $68 per share, this means that if my low assumptions occur, you would get an 11.3% annual return on your money, middle 20.3%, and high 29%. As far as my assumptions, I believe they are actually a bit conservative, as I have PayPal growing revenue between 3 and 9% in the next 7 years, averaging a profit margin and free cash flow margin between 13 and 19%, and I assign a PM price to free cash flow at the end of the 7 years of 16, 18, and 20. I also assume they buy back 2% of their shares annually for the next 7 years. Moreover, PayPal is trading at a price to free cash flow of 12, its lowest in 10 years. Therefore, I think it's fair to say that the stock is clearly undervalued. Now, I personally own PayPal, but let me be clear, you shouldn't buy a stock just because someone else owns it. This is not financial advice. In terms of my position, I plan to keep adding to PayPal because I'm currently sitting on a lot of cash, even though I'm already up about 26% on my position. And despite already holding another fintech company that's performing really well, which is SoFi, I still think that the risk-reward profile with PayPal is one of the best in the market. That being said, I also want to highlight that PayPal stock could still fall further, especially given the overall overvaluation in the broader stock market. If we see a market-wide pullback, I'll be taking that opportunity to buy more PayPal and continue dollar cost averaging into my position. I hope you found this video valuable. Let me know what you think about PayPal stock in the comments, and I'll see you in the next one.